Hey, welcome back. It's Jason Walter here. If you missed my video from yesterday, I reported that pending home sales in the US decreased despite an increase of houses listed for sale. If you missed that video, I'll leave a link below for you. In any case, if a slowing trend of pending home sales continues, this could affect home prices in the months to come. In the meantime, I would expect home prices to continue to increase in the months to come, given how hot our housing market has been over the past couple of months. And remember, it typically takes 1 to 2 months for a home sale to be finalized. In other words, home sales and the prices those houses actually sold for is really an indication of what the housing market was 1 to 2 months ago when the house went into contract. This is why I would call this a lagging indicator rather than a leading indicator. I mention this because in today's housing market update, I'm going to be sharing an update regarding home prices in the US. I'm actually really excited to share this video with you because I'm going to be sharing news regarding home prices on the state level as well as the city level, which is not normally what I do on this channel. And towards the end of this video, I have an update for you regarding mortgage loan forbearance numbers as well as a mortgage interest rate update. And before we get started, a lot of time and research went into making this video, so I greatly appreciate it if you hit the like button and also consider subscribing if you haven't done so already. Thank you so much for doing that. Let's go ahead and dive right into the video. The first report that I wanted to share with you today is a Corelogic Case-Shiller Home Price Index report that was just published a couple of days ago. They announced that home prices in the US surged 13.2% from a year ago, and that was the highest growth in over 15 years. This is already after an explosive start to 2021. So in January, their home price index grew by 11.2%. Then in February, it grew by 12%. According to Corelogic, home prices increased 1.95% from February to March, and that was the strongest February to March increase they have ever recorded. This also marks the 10th consecutive month of home prices increasing. When compared to 2017 to 2019, home price growth has been accelerating at 20%. So according to Corelogic, the heightened demand is partially due to the wave of millennials reaching a critical juncture in their lives when their families are growing and they need more space. However, there's also a sense of rush among non-millennial buyers who may be feeling rapid price growth will put homes out of reach soon. That is what you call FOMO. Some demand this spring might be spillover from last year's prospective buyers who were left sitting on the sidelines when this pandemic brought the economy to a halt. Okay, let's talk about the hottest housing markets in the US and which ones have been lagging behind. So this is following actually a familiar trend because for the 21st consecutive month, Phoenix led the pack with the fastest home price growth among the 20 markets Corelogic tracks. Home prices there surged by 20% in March, and this was the fastest acceleration since May 2013 and a 12 percentage points higher than the growth registered last March. In addition, San Diego followed closely behind Phoenix with a 19.1% home price increase. Seattle was in third place where home prices jumped 18.3%. And of the 20 cities that Corelogic tracks on a monthly basis, 19 of them experienced double-digit price growth. The cities that have been lagging behind continue to be Chicago and Las Vegas. Other cities to note were Portland, Denver, Dallas, and Los Angeles, all with around a 13.5% increase of home prices in March. What I found to be most interesting, though, was the fact that the vast majority of these 20 cities increased in the range of 11% to 14%, which demonstrates how widespread home price appreciation has been. And here's something I found in this report to be absolutely nuts regarding home prices. Corelogic reported that in March, national home prices on average were 32% higher than their previous peak before the Great Recession. And check this out because this is probably the most jaw-dropping graphic in this entire report. So Denver home prices are now 84% higher than their prior peak. That was followed closely by Dallas, Seattle, and Portland, all with prices over 48% higher than their previous peak. In contrast, Las Vegas and Chicago remain below their previous all-time highs, while Miami is now back to its previous peak. Okay, changing gears slightly, let me give you the latest news regarding mortgage loan forbearance numbers. Data analytics firm Black Knight just posted today that the number of homeowners in forbearance increased this week by 16,000. This now marks the second consecutive week of forbearance increases. However, this is only the third overall increase over the past 12 weeks. There are currently 2.2 million homeowners in forbearance, and that represents 4.1% of all US mortgages. Here's something on their report that we should definitely be aware of, and we should definitely follow this in the coming months, because Black Knight reported that plan starts hit their highest level in 9 weeks, primarily driven by elevated levels of restart activity. This isn't good news because restart activity basically means that a homeowner entered into forbearance, then they left forbearance, and now they're restarting once again. What we want to see is people leaving forbearance for good and not restarting again. In addition, new forbearance plan starts remain low, but they edged slightly upward this week, hitting their highest level in 9 weeks. And stay tuned on the channel over the course of approximately a month, because approximately 780,000 plans are currently slated for review for extension or removal in June. And this is the final quarterly review before early forbearance entrants began to reach their 18-month plan expirations later this year. I wanted to give you a friendly reminder here because if you still are experiencing a financial hardship due to COVID-19, then of course my heart goes out to you. If you are a homeowner, you still can enter into a forbearance plan. What this basically means is that you can enter into an agreement with your lender to stop paying your mortgage for up to 12 months. If your loan is backed by HUD, FHA, USDA, or VA, the deadline to request an initial forbearance is June 30th, 2021, so that's coming up. If your plan is backed by Fannie Mae or Freddie Mac, then there's no deadline set just yet. In addition, you could get up to an 18-month forbearance plan, but there's certain limitations that apply. If your mortgage is backed by Fannie Mae or Freddie Mac, then you must have been in an active forbearance plan as of February 28th, 2021. If you entered after that time, you're only eligible for a 12-month plan. If your mortgage is backed by HUD, FHA, USDA, or VA, then you must have been in an active forbearance plan on or before June 30th, 2020. And another friendly reminder here, if you have a federally backed mortgage, then you are not required to pay back all your missed mortgage payments in a one-time lump sum payment. If you don't have a federally backed mortgage, then talk to your lender or your loan servicer, which is the company you pay your mortgage to, about your options of repayment before you enter into a forbearance plan. To give you a quick mortgage interest rate update, mortgage rates actually dipped below 3% once again. According to Freddie Mac, the average 30-year fixed rate mortgage was 2.95% in their most recent survey. If you enjoyed watching this video, then please hit the like button. I greatly appreciate that. And also consider subscribing if you haven't done so already. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome weekend and look forward to seeing you in the next video.